Greetings, Great Hope learners. My name is Mr. Simbi, and welcome to our accounting class. And this lesson is brought to you by the Pakama Studios in collaboration with Cybono Discovery Center. It is a lovely thing that we meet right at the beginning of the year, and we are going to have our first lesson today. So today is going to be our very first lesson. In today's class, we're going to be focusing on the company's unique transactions. That's what we're going to be focusing on today. So it is very important that when I'm continuing with today's class, make sure you have somewhere to write, that you have a pen, you have a paper, and you will need a calculator for today's class as well. All right. So if you're ready, let's begin today's class. So here are my objectives for today's class. To begin with, we will do company's concepts. I will also look at the company's unique ledger accounts. I know some of you, that's what you're busy with in the classroom. So we're going to address some of the ledger accounts. We might not be able to cover everything, but we will touch some ledger accounts. And then we'll also do major shareholding. All right. So if you want to know what is major shareholding, please stay tuned in today's class because I will touch on that aspect as well. All right. Let's begin off with our company's concepts. You will realize that in grade 10, you did what was known as the sole proprietorship. This was the one-man business whereby the owner contributed the capital and the profits belonged to the owner as well. This was done in grade 10. And when we went to grade 11, we did partnerships whereby there were people that would come together, then they would bring capital together, and then they would also share their profits. But now that we're in grade 12, we are no longer going to be doing these two. We are now doing what is known as public companies. So we're dealing with companies in grade 12. And we're going to define what a company is, and we're going to touch all the concepts that will relate to companies as we are now in grade 12. So when I do these concepts, make sure that you have somewhere to write so that you can benefit from the notes that I'll be giving you. All right. So once again, make sure you have somewhere to write so that you may benefit from these notes. As we begin our concepts, we're going to start off first with the ownership. The owners of our public company are the shareholders. The shareholders are the owners of the public company. And then how many people, because in the sole trader, it is one man or one woman. And then in the partnership, we also did from 2, and then the number goes up to 20. But then in our companies, the minimum will be 7, but the maximum number will depend on the authorized share capital or the number of shares that will be issued. That's why you see here we wrote 7 up to infinity. Okay. And then in terms of legal entity, when we talk about legal entity, we're talking about the legal persona. All right. So in our companies, a company is a legal person. A company is a legal person as it pays tax. So it is very important as we are doing companies that you remember that a company is a legal person. It is a legal persona. Therefore, it also pays tax. And then the next one is on capital. How is the capital raised? The capital is raised through the selling of shares to the public. Remember, we say that the sole trader brings on capital, and in the partnership, it is the partners that bring in the capital. But in a company, our capital is raised through the selling of shares to the public. So that is very important. And you can imagine if someone buys shares, what do they become? A shareholder. So in this company, we're going to be having shareholders. But for one to become a shareholder, they buy shares from the company. Let's move on. In terms of profits and losses, what happens then? Because remember, with the sole trader, the profits belong to him and the losses are his as well. So in the company, what happens in the event of profits and losses? The profit generated is partly paid to the shareholders. You should listen to this part. Not all the profits will be given to the shareholders, but they are partly paid to the shareholders in the form of what we call dividends. So, once again, not all the profits will be given to the shareholders. Part of the profits will be given to the shareholders as dividends. So they get this as a return on their investment. Remember, on your investment, you get a return. And then dividends is the return on investment for the shareholders. And then the other part will be used to buy back shares. Now you're wondering what is buying back? I'm going to talk about that in today's class as well. And the rest is retained. To retain is to keep. So far I spoke about three things. When the profits are generated, number one, a part of it is paid as dividends. That's number one. Number two, a part of it is also used in the repurchase of shares. And then the remainder is retained or kept. We keep it, and then this cycle will continue on again. When profits are made, part is given as dividends, part is used in the repurchase of shares, and part is retained. It is kept, that is to retain. Okay, let's move on to the next aspect, financial statements. So the financial statements that we're going to find this year in our grade 12 year, we're going to find the statement of comprehensive income. You know this statement. You used to call it the income statement. All right. So this is going to be there in this year. We're going to be doing several of these ones. We're also going to do what is known as the statement of financial position. All right. Formerly the balance sheet. And then there's a new statement that we're going to do in grade 12. That is called the cash flow statement. So this year we're going to do these three statements: statement of comprehensive income, statement of financial position, as well as your cash flow statement. In terms of management, remember, the sole trader, it is the one man that manages the business. All right? When we come to companies, so I want you to understand this. The sole trader is the owner and is managing his business. When we now come to companies, is that the situation that the owners will manage the company? Certainly not. Remember, we said the number of shareholders can be as much as possible. So these shareholders would therefore not manage the business. So who then manages the business? Directors are appointed for this purpose. So directors are appointed by the shareholders to manage the business. Okay, so we've touched a couple of concepts. I want us to stretch a little bit further again. Let's look at more concepts that relate to our companies. The next one that I'm going to look at is what is known as the authorized share capital. Because we said in order to raise capital, the company is going to issue. You're going to find words such as issue or sell. So the company is going to issue or sell shares to the public. But then when the company is registered, there is a number of shares which must be stated that these are the number of shares that the company will issue to the public. And that is what is known as the authorized share capital. This is the maximum number of shares that a company is registered to sell. The maximum number of shares that a company is registered to sell. That is your authorized share capital. And then the next one is what we call the issued share capital. So out of the authorized share capital, the maximum, we then issue some shares to the public. That is what is called the issued share capital. So the issued share capital is coming out of the authorized. You will see as I begin to do calculations later. So authorized, the maximum number. Then out of that authorized, we issue now a particular number to the public. So the issued share capital, it is the number of shares that have been sold to shareholders. The number of shares issued is used to calculate dividends. So the number of shares issued is also used when we calculate dividends. You see again in today's class how we're going to do that one. Okay, let's move on. Issue price. What is issue price? It is the price at which shares are issued or sold to the public. So if you want to become a shareholder, you will be told how much it will cost you per share to buy the shares of this particular company. That is what we call the issue price, the price per share that is paid when you buy shares. And then dividends. Remember we said shareholders have invested in this particular company, and on investment we expect a return, and dividends are that return. Dividends is that portion of the profit, remember, a portion of the profit after tax which has been approved to be shared amongst the shareholders. Okay, so from the profit we take a portion and we give it to shareholders as dividends. But as we are going to continue in this year, we're going to talk about two types of dividends. Two types. You need to keep this and remember this. The first type is what we call the interim dividends. Interim, during. So once you hear the word interim, think during. So these are dividends that are paid during the financial year. These are paid during the financial period. And then we have what are known as final dividends. The final dividends are declared in the financial year, then they are paid in the year that then follows. You will see in today's class when I do the calculations how this will play out. And when we add our interim together with the final, it gives us the total dividends. That is dividends. Okay. I hope you're taking some of these notes down, because it helps when I do class with you that you do take notes down. That will help you to understand. Okay, let's move on to the next one. That is our provisional tax. What is provisional tax? It is very important to understand, as I said earlier on, that a company is a legal person that is entitled then to pay tax. So our company will pay tax over to SARS. But we pay tax out of the profits that we would have made. Out of the profits that we would have made. So we do not wait until the end of the financial year for us to pay the tax. So when we are busy in operation during the financial year, we will pay what are known as provisional amounts. Provisional amounts. So these are payments made to SARS during the year based on estimated profits, and we can pay this every 6 months. Okay, so other companies will decide to pay provisional tax payments such that they get to the end of the financial year, they don't have a huge tax burden. They would have paid some payments already. That is your provisional tax payments. Let's move on to the next one, which is the buyback of shares. Okay, so you're wondering, what is the buyback of shares? I'm going to address this even as we go. So we issue shares to the public, and something happens that this particular shareholder does not wish to remain part of the company. All right, so what we then do is we can buy back those shares from that shareholder. And it is very important to note that when we buy back those shares are retired or cancelled. What does that mean? We are not going to resell those shares back to the public. Once we buy back shares, we retire them or we cancel them. We don't reissue them back to the public. We retire them or we cancel them. And then the last concept that I'm going to talk about is your retained income. Retained income. What is retained income? Remember, we said earlier on, to retain is to keep. So retained income, it is a portion of the profit after tax that is not paid out to the shareholders but kept, in other words, retained for future financial growth or expansion of the company. All right, I want us to quickly now go on to calculations. Make sure you have your calculator close to you, because we're going to start some interesting calculations here. And we're going to do the company's unique ledger accounts. Let's begin. The information reads, the information below relates to Hose Limited for the year ended 28 February 2023. The company was registered. Okay, here's a quick question. Where are companies registered? Where do we go to register companies? We go to your CIPRO. What does this stand for? The Companies and Intellectual Property Commission. This is where we go and register our companies. Okay, so this company was registered with an authorized, the maximum number of shares, with an authorized share capital of 1 million ordinary shares. The ordinary shares, it is a type of shares that we are going to be issuing to the public. In our syllabus, we're going to focus only on ordinary shares. Anything else, it is not your syllabus. You're going to be focusing on ordinary shares. Okay, so we have authorized share capital of 1 million ordinary shares. Then during the year, the company issued. So we have now started to sell shares to the public in this case. The company issued shares at different times and different prices as shown below. So on the 30th of April, they issued 300,000 shares at 5 rand. And then they also issued these ones at 6 rand 50. What are we required to do? We are then required to record the transactions in the cash receipts journal because we are selling the shares to the public. So we will receive some money and we record that in the CRJ, and we're going to do an ordinary share capital account. Let's follow. Okay. So as you see, that is our information. Let's start off first with our cash receipts journal. We are receiving the money from shareholders because the people that have bought shares, called shareholders. Okay, so we have received the money from the shareholders. And then how many shares did we issue? We issued 300,000 shares. So we would come here, then would say we sold 300,000 shares. That is your 300,000 there. And we sold each share at 5 rand. So if you say your 300,000, multiply it by 5 rand. That is what gives you 1,500,000. Your 1.5. So we come to the bank, it's 1.5, then in our sundry accounts, and then we say ordinary share capital. You have to understand that after this, we then post this to our ledger, and we're going to have an account called the ordinary share capital account. This ordinary share capital account, it is an owner's equity account. Remember, you have to know where an account increases from. Is it debit? Is it credit? In your grade 10 or your grade 11, you guys did the dead click. You did the dead click. You did the dead click, whereby you debit your expenses, your assets, and your drawings. You did this. And you credit your liabilities, your income, as well as your capital. We're talking owner's equity here. So once you see the word capital, that means this account increases on the credit side. When we issue shares, we are receiving capital. So our ordinary share capital account will then increase in this case. Then we'll come and say bank, and then we have our 1.5 million. Definitely, we then go to the bank account and we debit it with ordinary share capital 1.5 million as well. Okay. Let's move on to the next aspect. We then come, remember we've issued these 300,000 shares already. So we're going to record now the issue of the 450,000 shares. All right. So on the issue of the 450,000 shares, they were issued at 650 rand per share. That simply means I'll come here and then I'll say my 450,000, I multiply this by 6 rand 50. And then make sure you have your calculator close to you. All right. I want you to punch in 450,000, multiply that by 6 rand 50. And then how much does that give you? It should give you 2,925,000. Are you still with me? All right. Do you get 2,925,000 on the calculators? Okay, cool. So that will be recorded then in your CRJ. In your CRJ, again, as we did earlier on, it is your shareholders. And then you record your 2,925,000, and then we come to the sundry accounts. Remember, ordinary share capital. The exciting part then comes when we post to the ledger now. Keep in mind, we have some shares that we issued earlier on. So that means in our ordinary share capital account, there are amounts that are already recorded. So when you come to the ordinary share capital account, you have a balance already now, 1.5 million. You have a balance, an opening balance that is coming from this issue of shares. And then we issued again a new issue now, which is this one with the 2,925,000. So we come here, then we say bank, and then we have 2,925,000. What I wanted to emphasize is once we have an issue, that becomes the balance. And then when we have a new issue again, it will increase our ordinary share capital account as you see there. All right. If we've understood that, then we're going to do an activity. So if you're ready, this activity is going to involve a lot of calculations. So you must have a calculator, okay? Have a calculator close to you. That is one thing that you cannot afford not to have. You must have a calculator. Okay, if you're ready, let's begin. We're going to do activity number one. Activity number one. And then it reads, the following balances appeared amongst others in the general ledger of Bambinos Limited. Okay, so we have 2022 and we have 2023. Once we have our 2022 balance, which is the 7.6 million, this is an amount that is coming from issues of shares in the past. So we have issued some shares in the past. That's why we have 7.6 million. We have issued shares in the past. And then with that income, it says, additional information. The ordinary share capital. The business has an authorized share capital of 4 million shares. That is the authorized share capital. All right. We know that here we're going to put this in the ordinary share capital account. That's what we're going to do. But I want to explain what is this authorized share capital. So remember we said that is the maximum. So we come here. This entire orange circle is our authorized share capital. Some would like to call it a pizza, but I'm just going to say this entire orange circle. That is our authorized, the maximum that a company can issue to the public. That is now our 4 million. So we come here. This is our 4 million shares. Okay. Then they tell us only 2 million shares were in issue on 1 March. 1 March is the beginning of this financial year. So we know that not the entire 4 million was issued. Half of it was in issue. That is what? 2 million. So out of the 4 million, we have issued only 2 million. Out of the 4 million that we can issue. We did not issue the entire 4 million. We only issued 2 million. Are you still following me? So we issued only 2 million. That means if we've issued some are unissued. Remember that. Keep that in mind. So if we've issued 2 million out of the 4 million, how many are unissued? Unissued simply means not yet issued. Okay? So if we've 4 million and we've only issued 2 million, how many are unissued? Not yet issued. The unissued is this other part now, which is how many shares? That is your 2 million. So 2 million shares are unissued. This is the unissued shares here, the 2 million. Okay, let's go on now. It then says, on 15 April, the company issued 60% of the unissued shares. Oh, so we already understand now what is unissued. Unissued in this case is 2 million. It is this orange part which is not shaded. That orange part, that is the unissued shares. So we have 2 million that have not yet been issued. 2 million that has not yet been issued. Out of that 2 million, we're then told 60% has been issued. So we're going to now come and we issue 60%. All right. How much does that give you? I need calculators, guys. I need calculators. How much does that give us? Thank you. It gives you 1.2 million. 1.2 million shares. So out of the unissued shares, which is 2 million, we have issued 60%, which is your 1.2 million. Then we have issued them at 5 rand keyword per share. 5 rand per share. That means I'm going to come to this 1.2, then I multiply this by 5 rand. Okay. How much then does it give us? How much does it give us? Thank you. Someone is saying, Mr. Simbi, it gives me 6 million. 6 million. Do you all get 6 million? Thank you. 6 million. So out of this issue, we have received 6 million. What do we do? Let's go record it. And then we're going to come and we're going to record the 6 million. Then we're going to come here. Then we're going to say bank. Come, then we're going to say bank, and then we record our 6 million. We record our 6 million over there. All right. Once we have that, it's going to make life very easy for us. I'm going to show you something as we go. All right. You see that triangle? I'm going to explain that triangle in the next slide. All right. If you want to know about that triangle, please come with me to the next slide. But even before I go to the next slide, you have to understand that once you issue new shares, you automatically calculate what is known as average price. Someone say average price. Yes, you calculate what is known as average price, your AP, your average price. You calculate your average price. Now, how do you calculate your average price? You now say your share capital, which is how much in this case? It is your 7.6 and your 6 million. That is your share capital. So you're going to come and say your 7.6 plus 6 million. That gives you how much? I'm going to put it over here. That gives you an amount that is 13,600,000. So you get 13.6 million. So you get 13.6. Okay, I added these two amounts. And then I divided by the number of shares in issue. Number of shares that have already been issued. Okay, we know that for this 7.6 million, how many shares were in issue? 2 million. You remember that one? So we have 2 million from the previous years, and we have 1.2 from this year's issue. So in total, it is your 2 million plus your 1.2. That gives you 3.2 million. Then you divide this 13.6 by 3.2 million. And then, how much does the calculator give you? Thank you. Someone say 425. 425. All right. So on the next slide, I'm going to explain where do we record that 425. Keep it in your mind. Our average price is 425. That is our average price. Let's go. So when we get here now, we are then being told that on 30 January 2023, 500,000 ordinary shares were repurchased. Remember, we've done that one, we've done this one, and we've done this one. So the new information is this bullet alone, which is now saying there's been 500,000 shares that have been repurchased, okay, from a dissatisfied shareholder at 6 Rand per share. Okay, so we know anything that has to do with shares, shareholders, we have to come to the ordinary share capital account. And already we've established so far that our ordinary share capital account increases on what side? Credit side. Thank you. So on this side, it is a plus. And then on the debit side, it is a minus. And we have already established the triangle. Remember, we spoke about it earlier on. And there's something that we calculated previously. You remember? The 425. What was it called? The average price. We have already calculated our average price. And how much was that average price? I gave it to you earlier on. 425. So we have this one. We have the average price. Then we come now to the triangle. On this triangle, there are several names that can be used. I'm going to use just a few. The tip of the triangle, the top of the triangle, we'll call it the bank. We call it the bank. Others call it the repurchase price. Repurchase price. So I'm just going to write it in shorthand. Repurchase price. Others call it the cash flow amount. Okay, so I'm just going to use these three terms: bank, repurchase price, the cash flow amount. Okay, these are going to be very important where we are going. Okay, then on this left side, we're going to call it the average price. The average price. We're going to call it the average price. All right. Others call it the note 7. Others call it the average price. Others call it the note 7. So it all depends what you have been told. Others call it the average price. Others call it the note 7. Then the right side of the triangle, others call it the above. Others call it the more. Others call it the difference. Okay, these are all names that can be used: above, more, or the difference. Others also call it the not 8 amount. Okay, so we're gonna go and see what to record. Already we have something, the 425, and what do we call it? The average price. That means when I come to my triangle, on this left side, I am going to get my what now? My 425. But I have been told that we paid 6 rand per share. We paid. So that is the repurchase price that I bring now to the tip or to the top of my triangle that I'm going to have here, which is my 6 rand. So already, if you use the term difference, I'm just going to get the difference between the 6 rand and the 425, and then that gives me my 1 rand 75. That is what we have paid above the average price. What we have paid more than the average price. That is the difference. That goes to your note number 8. Okay, the retained income. Now, we now know that we paid 6 rand. And we are not going to bring the 6 rand into the ordinary share capital account. So, which amount comes into the ordinary share capital account? We've already established it. That is the average price. So I'm now going to come and then I would say here, bank, because once we repurchase shares, it decreases our capital. Once we repurchase shares, it decreases our capital. So I'm coming here and then I'm going to say bank. And then how many shares did we buy back? 500,000 shares. Of these 500,000 shares, what was their average price? It is the average price that we bring to the ordinary share capital account. And the average price, we calculated it already, and we had 425. Are you still following me? Thank you. Thank you. Then we say 500,000 multiplied by 425. Then you get your 2,125,000. 2,125,000. Once you are like this, then you close off the ledger account. Please have your calculator close. We're now going to say 7.6 plus 6 million. That gives you what? 13.6 million. Thank you. 13.6. Remember, it's a ledger account. So I'm coming here. I'm going to have the 13.6 as well. Then I'm going to come here. Then I'm going to now say my balance carried down. 13.6 minus the 2,125,000. How much does it give you? It gives you 11,475,000. That becomes my balance brought down then, which is my 11,475,000. Okay, that's my ordinary share capital account. Simple. The only trick is you must not record the 6 rand in the ordinary share capital. The 6 rand goes to the top there. It goes to your bank, that is the repurchase price. Later we're going to record it in what we call the cash flow statement. It is the average price that we use in our ordinary share capital account. If you're good, please, let's continue. Now, once you have your ordinary share capital account, it is very important that you know that when we understand this ledger account, we can then transform it to open a note. Because when we're at the triangle, I kept talking about notes, and would have wondered, what is Mr. Simbi talking about? From this ordinary share capital account, we can then transform it into a note. Notes. You know that notes are what creates the statement of financial position. So in this year, when we create our statement of financial position, we are going to need note number 7. That is what we're going to do now here. Our ordinary share capital account is now being transformed, and we're going to use the information to make your ordinary share capital note, which is your note number 7. Note number 7. Okay, let's begin it. On my left hand here, I'm going to show the number of shares. Here, I'll show the number of shares. But on my right hand side here, I'm going to show the rand value now. I'm going to show the rand value. If you're ready, let's begin. We know that at the beginning, we have 7.6 million rands. But that 7.6 million rands was made up of what? of the 2 million shares that were in issue on 1 March. So it means I'll come here. What do I start with? Let me start with my shares. So I'll come here, then I'll say how many shares? 2 million. 2 million ordinary shares. 2 million ordinary shares. All right. That is on the 1st of March. On the 1st of March, that is the year 2022. The year 2022. At times you see others will just say shares at the beginning. Others will just say at the beginning. It's not much of a problem. So we have our 2 million as of the beginning, and the rand value is your 7,600,000. Okay, so are you ready? We have our number of shares and we have the rand value as well. Then we know that we issued more shares here. Remember, we did that already. We issued 1,200,000 shares, 1.2. And these were issued. These were issued at, what was the price that we issued them at? You remember, we issued them at 5 rand. We issued them at 5 rand. And it gave us 6 million rands. If you remember what we did, after that issue, we quickly came here and we calculated average price. Can I show you how to do that? You would add these two here. Your 7.6 plus the 6 million. They give us 13.6 million. Then we come here, then we add these two here, which is your 2 million and the 1.2. Then they give you what? They give you 3.2 million. You divide this, that is how you get your 4.25. That is your average price. Triangle, triangle. You remember the triangle? All right. So we then come here. We are told that on 30 January 2023, 500,000 ordinary shares were repurchased from a disgruntled or dissatisfied shareholder at 6 rand. All right. You remember on the triangle? I'm going to redo it again. I don't mind redoing it again. We agreed at the top, that is where we take our what? Our 6 rand. And then on this left side, that is where we take our 4.25. And then the difference, the above more, the one that goes to the retained income becomes your 1 rand 75. So here we're doing what? Note number 7. So that means when I'm doing now my repurchase, there's one thing that I'm going to do before I do anything. I know that the repurchase is going to decrease my capital. Decrease. So if anything is going to decrease, that means I'm going to subtract. So I'm going to put my brackets already. Before I even do anything, I have my brackets in. Do you see what I'm doing? I have put my brackets already. Then I now come and say 500,000. So I can now come and say minus 500,000 there. These are shares repurchased. These are repurchased at. They were repurchased at what? We record what here? Do we record the 6 rand? Definitely not. What do we record? 4.25. At 4.25, that is the average price. Okay? And then calculators, that will give you your 2,125,000. Then we do the calculations. We come down here. We end up with 11,475. And then we come here. We have our number of shares at the end, which is your 2.7 million. There it is. That is your ordinary shares at the end on 28 February 2023. Other text will just say at the end. Still one and the same thing. So what we have done so far, we started with the ordinary share capital account, which was increasing on the credit side, decreasing on the debit side when there's a repurchase. When we understood that one, we then went and we made the ordinary share capital note, note number 7. This is going to be important for the balance sheet, for the statement of financial position. And then we now have our note number 7. Okay, I'm glad if you understand this one. Then if you're okay, we are going to move on to the next aspect. Okay, if you're ready, let's go on to the next aspect. And our next aspect is going to be what is recorded in the retained income. Okay, so remember on our triangle, we had at the top, what did we have at the top? 6 rand. And what did we say it goes to? Bank, cash flow, that is the repurchase price, isn't it? And then here we had the average price, which was 4 rand 25. We agreed that it goes to note number 7. And then on the other side, we had our 1 rand 75. Where did we say it goes? It goes to your retained income account. So this goes to your retained income account. So we now have our retained income. Remember, to retain is to keep. To retain is to keep. So we have our balance on the retained income, which is your 900,000. All right, and we have our appropriation amount of 650. Then we're going to come and then we're going to say how much was spent above the average price. That is the amount that comes now to the retained income here. So I would then come here and I would say, here is my bank. And then how much is that? I have my 500,000. Then I multiply that by the 175. That is my 175. And then how much does it give you? It gives you 875,000. 875,000. Now we can quickly close this ledger account. What I wanted to emphasize is this aspect here, that the amount above, or the amount that is more from the average price, that is the difference from your repurchase price here, the 6 rand, and the average price, that goes to your retained income account. And later we're going to open a retained income note. That is your note number 8. So let's quickly close this one up. We close it off, and then we're now going to say 900 plus 650, that gives you your 1,550,000. And then here you have your 1,550,000. And then we come here, so we're going to get your balance carry down. The difference between that and that one, that is going to be your 675,000. Hence, at the bottom here, you're going to get your balance brought down. That is your 675,000. Okay, your 675,000. Okay. Once we've understood this one, I'm gonna move a bit quicker now. I'm coming now to your income tax. Remember, we've already agreed that our company is a legal person. It is a legal persona. It is liable then to pay tax. So we're going now to do our tax calculations. And we're going to open the first account, which is called the SARS income tax account. Okay, if you're ready, let's begin. In the SARS income tax account, we are told that as of the previous year, we have 18,000, but it is a credit balance. A credit balance on your SARS income tax simply means we have a liability in our hands. We owe SARS. From what we were supposed to pay SARS for our tax in the previous year, we have not paid all of that. We were owing 18,000 of that income tax. So when we begin this year, we have to take that into consideration. So we are told that the balance is credit. Remember, here is your debit and here is your credit. So I'm going to come here and then I'm going to say my balance brought down is the 18,000 that I have there. 18,000. Okay. So I was owing this as a company. We are owing this from the previous financial year. Then we are told that the income tax due in respect of the previous year was paid. So at the beginning of this financial year, we have taken note that in the previous year we were owing some money for income tax, and we have then paid that particular amount. So it simply means we come now to the debit side, then we'll say bank. And how much are we going to pay? The 18,000 that we were owing. We pay the amount that we're owing in the previous year. Okay, let's continue. We're then told that the company paid 250,000 to SARS for provisional tax on the 31st of August via EFT. So we need to record this provisional payment then. So I'm going to come here and I'm going to say, here is my bank. How much did we pay? We paid 250,000. So I'm going to come here and I'm going to say 250,000. The provisional payments then will be recorded on the debit side. Let's continue again. We're then told an EFT payment for the second provisional tax payment was made on the 15th of February. So we made a second provisional tax payment on the 15th of February, but they did not give us the amount. Okay, let's see what the next bullet says. The total provisional income tax for the year. So of the two provisional tax payments that we've made in the year, we are then given the total, which is 725. So the 725 is the total. The 725. This is the total provisional tax payment. However, it includes the first provisional tax payment, which was how much? Which was 250. So we come here, then we say 250,000. We're subtracting it from this total. Okay, we subtract this first provisional payment. Then we remain with the second provisional tax payment. How much do you get? If you say 725 minus 250,000, you get how much? Thank you. You get 475,000. So I'll come here. Then we get bank. That is your 475,000. That is your provisional tax payment, the second provisional tax payment. Then we're then told that income tax was calculated at 30%. Net profit after tax amounted to 1,750,000. All right. So we need to calculate now our income tax, which we're going to record here on the credit side. We are told that it is calculated at 30%. Net profit after tax amounted to 1,750,000. This is a very tricky aspect. You have to understand that you have net profit before tax first. So you have your net profit, that is before tax. And that is always going to be 100%. A net profit before tax is 100%. Then you have your income tax, which we have been told here is 30%. Okay, remember we subtract this income tax such that we remain now with what we call net profit after tax, which is 70%. So net profit after tax is 70%. That means this 1,750,000 is not net profit before tax, because they told us this is net profit after tax. So as a percentage, what is it? It is 70%. It is this one there. What is it that we want then? We want our income tax. So we want 30. We want 30. What do we have? We have the amount after tax, which is what? 70. We have 70. Then we multiply this by the amount, which is your 1,750,000. And then how much do we get at the end? In your calculators, please. Thank you. Someone says 750,000. Okay, so we come here, our income tax is going to be 750,000. 750,000. And then when it's like this, then we close off the ledger account. Let's quickly do that. You look for the side with the highest amount. Which one has the highest amount? Your credit side. Thank you. Then you say 18 plus that one. That gives you 768,000. So this becomes 768,000. And then we're now going to get our balance. Carry down. 768 minus that, minus that, minus that. It will give you how much? Okay? 768 minus 475 minus 250 minus 18. Thank you. It gives you 25,000. So we come here. You are now going to get your balance brought down. That is going to be your 25,000. That is how we would do it. Okay. I'm going to quickly come. This is what we did. Remember, this is what we have done so far. So we have our balance here that was brought down. That is 25,000. Remember, this is a liability. This is a liability because it is a credit balance. So a liability, if we're preparing a statement of financial position, you know it is a liability. Now, we're going to post these amounts now to what we call the income tax account. Because in the SARS income tax, we have credited it with income tax of 750. We come to the income tax and then we're going to debit it with SARS income tax 750. And then we close this off to our appropriation account. Then we come to our appropriation account, then we debit it with income tax 750. Then we know we're given profit and loss of 1.2 million. Okay, I'm going to continue from this. Let's see the next part. Our next part is going to be activity number 2. Activity number 2, we're going to be calculating amounts that we're going to enter into our SARS income tax, our income tax account, as well as the appropriation account. Okay, if you're ready, we're going to meet again in the next 5 minutes. Okay, so we're going to take a very short break, 5-minute break, and then we're going to come and we do this activity. Okay, so see you in the next 5 minutes. Welcome back, dear learners. Before the ad break, we promised that we're going to do this activity. So let's now start. We're going to do this activity together. So we're going to open our SARS income tax account, and we're going to open our income tax account. Also, this one is going to be just an income tax account. This is just an income tax account. Then we're going to go also to the appropriation account. All right, so let's begin. We are told that the SARS income tax has a debit balance of 8,000. There's a debit balance of 8,000. So that simply means when I come now into my SARS income tax, I'll start it off with a debit balance. There it is. I have my balance brought down, which is 8,000, a debit balance. Then the next transaction then says, on 20 July, the total amount for two provisional payments to SARS was 360,000. 55% of the total was paid on the 31st of August, and the second payment was paid on the 20th of February. So let's record these ones separately. We know that the total was 360,000, yet 55% was paid on the 31st of August. So if we say 360,000 multiplied by 55%, you get 198,000. So that means I'm going to come here, and my first provisional payment was 198,000. So I have my 198,000 over here. Then my second provisional payment, therefore, would be the difference between 360 and 198,000, which will be how much? If we say 360,000 minus 198, you get how much? Thank you. You get your 162,000. So I'll come here. My bank here is 162,000. That is what I get there. Okay, let's continue. We're told that the net profit for the year after taxation amounted to 945. Net profit after taxation amounted to 945. We understand that we have net profit before tax, which is 100%. Okay, and then we have income tax, which is what percentage? 30. We're given here 30%. And then we also have net profit after tax. Net profit after tax is how much? 70%. So when we come here, we're told the net profit for the year after taxation was how much? 945. That means this is the 945,000. So we now know what we want. What do we want? We want income tax, which is my 30 over 70 multiplied by 945,000. Okay, then how much do I then get? I get 405,000. Are you still following me? I get 405,000. So I'm going to come here, and then I'm going to say here, income tax. Income tax is 405,000. Income tax is 405,000. Is there anything else that we still need? No. We can close this ledger account. Let's close it off. Which side has the highest amount? The credit side. You see, that's the one with the 405. So I'll come here, then I'll have my 405,000. Here is my 405,000. And then we're going to now have here what we call the balance carry down. So it's 405 minus. That is going to give us 37,000. Then we come down here, we're now going to have our balance brought down. That is your 37,000. That is how we do this ledger account, okay? Exactly as we did earlier on. So this balance is a credit balance. That makes it a liability. This one was a debit balance. That makes it a what? An asset. Let's now come into our income tax account. In our income tax account, we'll come now to the debit side, and then what do we then say? We say here SARS income tax. All right, and then how much is that SARS income tax? That is your 405,000. And then we close this off to our appropriation. Okay, in our appropriation, we are going to have our 405,000. Are we together? And then we now know that we close this off to our appropriation. So we're going to come to our appropriation. All right. Then what do we say? We are now going to say our income tax. All right. We're going to say our income tax. And how much is that? Remember, that's the 405,000. That's the 405,000. And then here we're going to get our profit and loss. Our profit and loss, that is the net profit. So we want to know how much is that net profit, okay, the profit and loss. You can calculate this one, it's easy because you are getting the profit before tax. In other words, you're simply going to say what you want is 100 over what you have, which is what? The net profit after tax, which is 70. Multiply that by the 945,000. And this will give you the amount that is before tax. Punch that in your calculator. I think you get 1,350,000. So you come here, it's a 1,350,000. That is then sorted. Okay, let's quickly move on to the next aspect, which is dividends. Dividends. Remember, we say dividends, this is the return to the investors, that is the shareholders, on their investment. They get dividends. Two types of dividends, remember. It is the interim and the final dividends. Let's see. Let's start first. It says, Mlungisi Limited has an authorized share capital of 2.5 million shares, and they issued 1.5 of these shares at 3 rand. Very important. No additional shares were in issue or repurchased. Then, the company declared and paid an interim dividend of 14 cents. So we're going to come here. We now want to know how much was the dividends paid. We are told the company had issued how many shares? 1.5 million. So we're going to come here. You're going to have your 1.5 million. And they paid a dividend of what? 14 cents times 14 cents. And this is going to give you how much? 210,000. So you get 210,000. So I'll come here because this is my, it says the company declared and paid. So I have paid there. So I'm going to come here, then I'm going to say bank because these were paid. And I have my 210,000. They were paid. Then I'm told them the company issued a further 300,000 shares. So that simply means out of the 1.5 that I had issued, I issued more now. I issued another 300,000 shares. That means I now have 1.8 million. I have 1.8 million. The company bought back 50,000 shares, all right, at 140 cents. Then the company bought back. So on the 1.8 million that I had, the company bought back how many? 50,000 shares. How many shares do they have now? 1,750,000. A final dividend of 9 cents per share was declared. The repurchased shares do not qualify. So this is very important. Once the examiner tells us that they do not qualify, then we do not give the shares that we repurchased the dividends. So we only give the dividends to the 1,750,000. Then you multiply this by your 140 cents. Okay, they to the 9 cents rather, you give 9 cents. Multiply this by your 9 cents. So it's 1,750,000 multiplied by 9 cents. And this will give you how much on your calculators? You get 157,500. So I'll come here. Now, these ones were only declared, but you had these ones were declared and paid. So the ones that were only declared is the final dividends, okay? The final dividends. They were not paid. They were only declared. So we'll come here, then we call them shareholders for dividends. Shareholders for dividends. And that is going to be your 157,500. Okay. And then that is it. Then I add these two amounts, and then they give me how much? 367,500. So I'll come here, then I'll get my 367,500, which I would then close off this account to my appropriation account. I'll close this off to my appropriation account. And how much is that? 367,500. Remember here, I have shareholders for dividends. Okay, I have shareholders for dividends here. So I'm going to come now to my shareholders for dividends account, because these are dividends that we owe to our shareholders. We owe these dividends to our shareholders. So I'm going to come now to the credit side, because once we owe, it is a liability. So I'm going to come here, then I'm going to now say ordinary share dividends. Ordinary share dividends. Okay, and then the amount is how much? 157,500. 157,500. That is my ordinary share dividends. And then the appropriation amount, remember, I'm going to close it off to my appropriation. And what do I say? Ordinary share dividends. Ordinary share dividends. You would find other text would say dividends on ordinary shares. It's still one and the same thing. Then you get 367,500. Okay. So at the end of the day, we are now going to close off what we call the appropriation account. Remember, we did the income tax, and then we did our ordinary share dividends, and then we had our profit and loss, then the retained income, then eventually we close it off to retained income. We come to the retained income as well. I'm not going to spend much time here because there's several methods of doing this. So I do not want to touch on this aspect because there's a number of methods of completing this appropriation and the retained income. There's a number of ways that you can do that. So I'm going to move on to my next aspect. I'm going to do now with you some notes. Let's quickly do some notes because now we know how to do notes. Okay, let's do activity number 3. We were going to do some notes. The first note that we're going to do is the ordinary share capital note. Okay, it says our authorized share capital is 1.6 million. Then 80% of the shares are in issue. Okay, so we're going to say, what is 80% of the 1.6 million? So we're going to come, we take our 1.6 million, which is our authorized, that is our 1.6 million here, and then we want to get the 80%. Make sure your calculators are closed once again. So 1.6 multiplied by 80%, how much do you get? 1,280,000, 1,280,000. So I'm going to come here and I'm now going to say, at the beginning, I had 1,280,000 shares. Okay, shares, that is on which date? The 1st of March. On the 1st of March, the year 2022. Okay, and then how much was that going to give us? We don't know the rand value there. We are not given the rand value. It's still okay. What were we given? We're given this one, but that is for 2023. Let's see how this is going to play out. Then we are told the average price of each share amounted to 5 rand 45. That is there at the beginning. So if you have a calculator, you can simply get the amount that we're going to use there. So you can simply use your 5 rand 45 and then you can get the amount that we're going to use here. But I want to use a different method. Then we're going to come back again to the same answer. So for now, just follow me. And then it says 300,000 shares were repurchased. Already we know we have the average price. So we come here, then we say 300,000 shares were repurchased. I told you once it's repurchased, what do? You put brackets already. So it's going to be 300,000 shares that were repurchased. These were repurchased at what price? The average price, 5 rand 45. That is the average price. So you're going to say this multiplied by the 5 rand 45, you get your 1,635. 1,635. Can I go on? Okay. Then I'm going to go on. Interim dividends, additional shares were issued at 6 rand. So we don't know how many shares. They just said additional shares were issued at 6 rand. So we're going to say here, there's another shares issued. They were issued at what? At 6 Rand. All right. And we don't know how much that is going to give us. Then we are then told that 1,180,000 shares were in issue. So here we get 1,180,000 shares, that is shares at the end. At the end. And we know that at the end we are given what? The 6,541,000 that was given there at the end. So we can get this number of shares here that was issued. I want you to have a calculator. Then I'm going to tell you what to punch in. All right. So we are going to devise a formula that if I am going up, I'm going to do opposite of the signs. And if I'm going down, I follow the signs. All right. If I go up, I do opposite of the signs. In other words, I'm going to take my 1,180,000 plus the 300,000. 1,180,000 plus the 300,000 minus the 1,280,000. Okay. Once you do that, how much do you get? Thank you. You get 200,000 shares. Then your 200,000 shares were issued at 6 Rand. That gives you what? 1.2 million. Then you get to 1.2 million. Then you remember we spoke about this one. You would have got this one already, but we wanted to see, can we also get another way of still getting the same amount? So you're going to start again from the bottom, where you take your 6,541,000, you do opposite of the sign. So you're going to say 6,541,000 minus this figure, minus the 1.2 million, then plus the 1,635,000. And then how much do you get? You get your 6,976,000. That would have been the same figure that you'd have gotten if you had done it the short way. Remember, we're given the average price of each share, which was 5 Rand 45. So I wanted to show you, if you are not given that, what else could you have done? Okay, I'm going to move on to the next activity. The next activity now is the retained income. The retained income. In our retained income, the formula starts with the balance at the beginning. So here we have our balance at the beginning. So the balance at the beginning of retained income is 376,600. So here it's going to be 376,600. And then you are now going to get your net profit. In the retained income, we always record net profit after tax. Net profit after tax. And here the correct net profit after tax is 959,400. So here is 959,400 net profit after tax. And then we know that whenever there's a repurchase of shares, we record it here. So I'm going to come here and then we're going to say repurchase of shares. Repurchase of shares. How many shares did we repurchase? 300,000 shares were repurchased at 465, above the average price. So that simply means we are already given the amount that we're going to record here, that is the 465, above the average price. If you were given the price per share, you would have said 300,000, multiplied that by the amount above as well, if you're given that one. But here in this question, they gave us the total amount already, which is your 465. Let's move on. Then after that, we are then told that an interim dividend of 30 cents per share was paid. Remember, this is now on the 31st of August. So you now need to know, how many shares were you having on the 31st of August? Remember, at the beginning, you had how many shares, which is the 80% of that. Remember, we did this one already, and we had our 1,280,000. Remember, we had that one already. So at the beginning, this 80% was 1,280,000 shares. So you say that 1,280,000 shares, and then the next thing that then happens is there is shares that were repurchased. Okay, then they say 300,000 shares were repurchased at 465 above the average price. All right, so these shares were repurchased above the average price. So we're going to come here, then we say 1,280,000, then we are going to come and show the amount that was repurchased. That is what? 300,000 shares. So once you have that one that was repurchased, you now come and you say, how much do we then get as the remaining shares? The remaining shares would be, we're going to get the remaining shares. We're now going to say our 1,280,000 minus the 300,000. That is going to give us our 980,000 shares. Are you still following? Okay, so we had 980,000 shares. 980,000 shares. Of those 980,000 shares, we're told an interim dividend of 30 cents per share was then paid. Okay, so we're going to say 980, then we multiply this. We multiply this by the 30 cents. We multiply this by the 30 cents, multiply this by the 30 cents, and then how much does it give us? It gives you 294,000. 294,000. So we're going to come here and then we're going to get our interim dividends. Our interim dividends are your 294,000. Okay, let's go on. Then they said additional shares were issued. All right, so we had 980,000 shares. With 980,000 shares, and additional shares were issued, remember, and then eventually we realized that it was 200,000 shares. We calculated that one to end up now with the 1,180,000. So we have 1,180,000 when issued, and then final dividends were declared. Final dividends were declared. Now we don't know how much were the final dividends that were declared, but what we know is that at the end of the year we have a balance that we are given here, which is 284,600. So we don't know the final dividends that were declared here. We don't know the final dividends that were declared here. But what we know is that here we have a balance at the end. And the balance at the end is going to be your 284,600. Okay, 284,600. We know that here we have ordinary share dividends. Here we're going to have our ordinary share dividends, which we're going to subtract. So we want to get these dividends that we are not given. But for us to get that one, make sure you have your calculator close to you, because we're going to do some calculations together. Okay, I'm going to show you what we're going to do. In order for us to get these dividends, I want you to punch. The first figure is going to be your 376,600. So you say 376,600, and then you then say of that 376, add the 959,400. Then you say plus your 959,000, 959,400, 959,400. Okay, and then after you have added your 959,400, okay, it is your 959,400. How much do you get there? It is your 959,400. And then once you get your 959,400, you should get on your calculator, that is your 1,336,000. Then you will then subtract your 465,000. Go and subtract your 465, that is for the repurchase. You subtract your 465, your 465,000. Subtract your 465,000. And then you would then remain with 871. Then subtract this last balance as well. From that 871,000, then you say minus the 284,600. Then minus the 284,600. 284,600. Once you subtract the 284,600, then you remain with 586,400. So here it becomes 586,400 here. that is made up of two dividends, the interim and the final. Then you already know your interim, so just come and subtract your interim, which is 294. Then you say minus 294,000. Minus 294,000. That would then give you your final dividend, which is 292,400. I wanted to show you what you would do if you are not given some certain figures. Okay. After we're done with this, I'm going to quickly do a very quick activity with us that has to do with major shareholding. Let's quickly go on to it. When you talk about major shareholding, it refers to the ownership of a significant portion of a company's shares by an individual. In other words, when shares are issued to the public, when an individual holds a significant portion, then that individual is called a major shareholder. And there are two options that we're going to explore in calculating major shareholding. The first option is the 51%. If an individual holds 51%, therefore he becomes a major shareholder. The second option, it is the 50% plus one share that makes him a major shareholder. We're going to do some calculations here and see if we can answer these questions. It says, calculate Brent's percentage shareholding on 28 February. So we have a shareholder called Brent. And if you come here, at the end of the year, we want to know what is his percentage shareholding. What is his percentage shareholding? Okay, so what is happening is that in this company, Mike has given advice to the directors and they've decided to issue additional shares. So more shares are going to be issued, to existing shareholders. And these shares will be issued at 21 Rand per share. Shareholders were allowed to purchase 10 shares for every 40 shares that they were owning. Okay, so now Brent Flower and Karina Moss are the shareholders in the company, but not directors. None of their shares were repurchased. Okay, so here we have Brent and we have Karina. Now, we want to calculate the percentage on Brent's percentage shareholding. If they are going to buy shares, you understand that at the beginning, he had 300,000 shares. That is what he had at the beginning. 300,000 shares. That is what he had at the beginning. And we are told that they are going to issue shares, but the shareholders will be allowed to purchase 10 shares for every 40 that they own. So if Brent is owning 300,000 and is allowed to buy 10 out of every 40 that he owns, how many shares is he going to buy now? He's going to buy 75,000 shares. So he's going to add 75,000 more shares. How many was he having? He was having 300,000. And how many more shares are going to be added to his number of shares that he was having? He's going to have 75,000 more shares. That means he's now going to have 375,000 shares. Okay, so now he holds 375,000 shares. And then we are told that the number of shares at the end is your 1,325,000. So we're now going to say the shares that he now has, which is 375,000 shares, okay, we divide it by the total number of shares that are in the company, 1,325,000 shares. We multiply this by 100/1. How many shares, or what percentage rather, does he have now? You'll find that it is 28.3%. He now holds 28.3%. Here he was holding 23.1, but now he holds 28.3%. 28.3%. Okay. So his percentage holding has improved from what he was having, 23.1, now he has 28.3. How did it improve? He bought more shares. Let's move on to the next one. Then it then says, Brent and Karina decided that they would combine their votes at the upcoming AGM. So they're going to combine their votes. Brent has 28.3% and Karina has 26.4%. Therefore, their total percentage shareholding would be how much if they are to combine? That would give them what? 54.7. Then they would have 54.7%. Explain one possible reason for this decision with figures. One reason why they would do this, combining their votes gives them a clear majority of 54.7. This will lead them to have more control over the business decisions, and then they will be able to influence decision making because they hold 54.7%. And then more dividends, as they will be proportionate to the number of shares. Okay, so if you're a major shareholder, you get more dividends. But in this case, we're talking about in terms of decision making much. And then in the long term, if they have good intentions for the company, this will benefit the company in the long term as they would influence the company towards good performance. So that is one other reason why they may do that. And then the next question then comes and says, as an existing shareholder, explain why you would be concerned about the strategy of Brent and Karina. Then you must provide 2 points. Them combining their shares or their percentage shareholding, them combining their percentage shareholding. Explain how you as a shareholder would be concerned about this. Point number one, they might use their power to benefit the company, or they might have ulterior motives. They might be having other motives behind this decision. Shareholders will be concerned about their experience, skills, and knowledge. If these two do not have much experience and knowledge, that will put the company at great risk because these people influence decision making. You'll be concerned if they understand their responsibility as major shareholders. Do they really understand what it means to be a major shareholder? You'll be concerned if they will provide support to the CEO, the CFO, and other directors. You'll be concerned if they'll be willing to serve on the board. And lastly, gaining control of the company could be a good or aggressive decision. So if it is an aggressive decision, therefore they seek to have much control of the company, that may not be good in the long run. Okay, dear learners, we have now come to the end of today's class, and we are going to end here. I want to thank you for joining today's class, and I hope I'm going to see you again in our next sessions. Remember, every time you continue practicing, that is how you can only become better. It is goodbye.